Trump's 50-year mortgage idea, what it would and wouldn't fix with home affordability, stretched and 30-year rates still north of 6%, President Donald Trump has floated a dramatic shift: a government-backed 50-year mortgage. In a Fox News interview on Monday, he played down the change. You pay less per month, it might help a little bit, positioning it as a modest way to ease monthly pain without a wholesale rewrite of housing policy. The trial balloon followed weekend posts by Federal Housing Finance Agency, FHFA, Director Bill Pult, who said the administration is working on a 5-decade loan and also studying assumable or portable mortgages. Inside the West Wing, however, not everyone was thrilled. Multiple officials told CBS the idea wasn't fully vetted before it was splashed online, underscoring how early and unsettled the concept remains. How much would a 50-year term actually save monthly? Not much, according to back-of-the-envelope math from economists. CBS calculates that on a $400,000 home with 10% down at 6.25%, the payment drop going from 30 to 50 years is only about $250 a month, and 50-year rates would likely be higher than 30-year rates, shrinking that gap further. AP's number crunching tells a similar story at the median price point. On a $450,200 home, monthly payments might fall from roughly $2,288 30-year to $2,022's 50-year, but the borrower would pay about $389,000 more in interest over the life of the loan and build equity at a crawl. That slow equity path is why several economists warn the plan could leave households indebted longer without solving the root causes of high housing costs. Rates context matters too. The 30-year fixed averaged 6.22% in Freddie Mac's latest weekly survey, November 6. Extending the term can trim the monthly, but if lenders price extra risk into a 50-year loan, as they often do for longer durations, the theoretical savings shrink. There's also the law. Today's mainstream market is built around products that don't exceed 30 years. The CFPB's qualified mortgage rule caps QM terms at 30 years. Fannie Mae only buys fixed-rate loans up to 30 years. And FHA regulations set a 30-year maximum for insured loans. A true 50-year mortgage would therefore require regulatory changes and potentially legislation, or would live in a smaller, costlier, non-QM corner of the market. Politically, reaction on the right has been mixed. Some conservative voices labeled it a lifetime mortgage, prompting Trump to emphasize that it's not a big shift and may only help a little. The broader affordability fight, meanwhile, continues to hinge on supply. Without more homes, demand-side boosts risk nudging prices higher, a point echoed by housing economists and even administration-friendly analysts. Bottom line, a 50-year mortgage could shave a couple $100s off monthly payments for some buyers, but at the cost of much higher lifetime interest and slower wealth building, and it isn't currently compatible with the rules that govern most U.S. mortgages. Watch for whether FHFA clarifies if the idea is a niche pilot or part of a broader package, like assumable or portable loans, aimed at unlocking inventory. For now, the center of gravity in policy debates remains on building more homes, not stretching payments into the 2070s.